bring in Walser Wealth Management President Rebecca Walser. All right, so before we talk about markets and stock markets and things, obviously I think of Rebecca Walser, I think of gold. You loved it when everybody hated it. You were pounding the table on it. All of a sudden, everyone loved it. It went parabolic.
Exactly.
Pull back a little bit here. But when you loved it, though, what was interesting is your reasoning for loving it is still in place, right?
Yes.
Feckless and crazy spending. Mm-hmm. But since then, central banks have loaded up on it. Retail has loaded up on it. My question is, do you think it's going to go higher than you maybe thought even a year ago?
I mean, absolutely. I think if you can't beat them, join them. We saw a lot of institutions that were short, and then they went long. I mean, majorly long. So, and got out of their short positions kind of at the low, which is actually very surprising. Case study needs to be made about that. But yeah, I mean, Charles, central banks are buying it for a reason. I mean, this is the beginning of us moving away from fiat paper currency to really stable coins, digitization, and the blockchain. And you have to have a tether of some kind to a real hard asset. Gold is going to be that one of those assets, gold and silver, I would say.
Yeah, I mean, tether alone is what, like, golly. I mean, it's really been amazing.
Yes.
While gold has gone parabolic, even with this recent pullback, the market's been essentially sideways, but we're in a narrow trading range, but it's a crazy, right? It's like a tempest in a teapot kind of thing. What's your interpretation of this?
Well, I mean, a lot of things have happened. So if you look like even COMEX, they've raised margins 3 times since December. So on paper, paper ETFs. And so the bottom line is that we had speculators jump in and say, oh my gosh, let's this is going parabolic, let's join them. And then you had some deleveraging with obviously margins being raised. So I think if you just look at the long-term fundamentals, this is a long-term play. You can manage it with price swings, but I think overall long-term, it's going to continue to go up.
So you like the market higher from here?
Absolutely, absolutely.
Let's talk about the ways of making money in the market. Into it, I actually had a guy on yesterday that said anyone that would let AI do their taxes has a fool for a client. I think some people let AI do it, but you still think Intuit is well positioned here.
We say that as lawyers too. Don't hire yourself. Yes, I mean this was totally oversold, completely overblown. This is 50% off of its high. It's trading at a PE ratio, Charles, that has not seen in over 10 years. Very low, very discounted, and 17% trailing upside revenue. Both EPS and net income are over 40%, and they have a partnership with OpenAI. So I think that they are trying to make sure that they don't become irrelevant, that they do move into the age of AI.
Pool Corp, this is a name that hit my radar a couple of years ago. When again, one of these names, Pool, who knew?
Right.
This stock, when it gets hot, it gets really hot. You think it's about to get hot?
Absolutely. They have a really interesting business model, business to business, and 62% of their revenue in 2023 was from recurring maintenance. So it's not like, okay, we have to have constant new construction. Right. They have a really good business to business maintenance model with builders, pool contractors. So for that reason, we think that long term, it's a really good buy.
But also, let's bring that back up because there's something interesting on there. Because I'm looking at some housing stocks as well. The administration is making a serious push.
Absolutely. Absolutely. And if we can keep the BlackRocks and the Blackstones of the world out of owning the neighborhoods, then I think Pool is going to do great.
Let's talk about Oxy Petroleum.
Yeah.
So this is a name, listen, Warren Buffett loaded up on it. It still went down even though it had Warren Buffett behind it. A lot of reasons, but now oil is hot. Oil stocks are hot. And you say this is just the beginning of a commodity super cycle.
Yeah, we think that they're really positioned. So to your point, Berkshire owns 28% of their common stock, but we think that oil is positioned well with the Iranian situation, the Middle East situation, with Venezuela situation, with that reduced production. We think oil is positioned well for the next 2 years. And so we really do think, and they're positioned well because they're not just in crude, they're also in gas, they're also in middle market operations, and they're also in chemicals. So for that reason, they are really diversified. We think that they're going to do well.
This I didn't really know, the correlation or inverse correlation with interest rates?
Yes. Yeah, I mean, you have to look at what all of the countries are doing and what the geopolitical risks are. Obviously, OPEC and OPEC price setting. And obviously, like I just said, Venezuela, a reduction in production is obviously going to increase the price. So, but we don't need Occidental doesn't need the prices to be super high in order for them to be profitable. All
right. And then let's look at Duke Energy. Again, Duke is one of these names. Everyone's talking energy, power. We know the power demand is there. And I guess What is distinctive about this versus maybe some of the other utilities?
Okay, that's a great question. Their CapEx spend for the next 5 years is the largest of any U.S. regulated utility, period, bar none. So $103 billion. They're looking at really capitalizing to take control of data centers to provide that gigawatt of power. They are at 19.8% on their PE, and industry standards 26, so they're already discounted. They've had 18 years of consecutive raising of their dividends, 3.4% right now. So we think they're positioned to really cash the checks that AI is writing for energy.
All right. I love it. We got 4 names there. And every time I got to say, congratulations on that gold call.
Thank you.
All right.
I appreciate it.
All right, folks.